All right, and we're live. Here we go. Wow, there's a lot happening in the markets last week. The worst week for the Dow since October. The worst day for the Dow this year so far. And this morning, we at first had a bounce back. I mean, looked like it, but it intensifies. Right now, still down the markets. And this week, a lot going on. More earnings. Nvidia reporting earnings. Home Depot reporting earnings. This morning, Domino's Pizza reported earnings. News from Starbucks and Apple, as well as Warren Buffett. So, as you can see, there's a lot to talk about. So, with that said, let's get started and welcome to Coffee with Markus and Mark. And today is Monday, February 24th. And in this show, we're going to talk to you about what's happening in the markets and how we are trading it. Mark, and it's so good to be back. We haven't done it together in a while.
Yeah, it's been a little bit, Marcus, but great to have you back.
Yeah, thanks for covering last week. Last week, Monday was a holiday, and then Tuesday,
And then
you did
came
it solo.
in.
And wow, look at that. So on Friday, we were slamming right into the 50-day moving average. And at first this morning, it looked like, okay, every time we do this, there's another buying opportunity. And initially, markets opened 0.4% higher. But ever since, still trying to figure out what's happening today.
Yeah, it looked like investors were a little cautious, holding equities into the weekend, and we talked about it with our mastermind group. It seems like every weekend there is new news about tariffs and what could be happening in the markets, and so it looked like investors got a little shaky there with their diamond hands. And this morning, just some indecision, trying to figure out what comes next.
Yeah, and so this were also analysts tried to figure out what happened last week. Why did we move lower? And this were after the fact. Some analyst says, well, it was because we had the revised University of Michigan sentiment that came in lower than expected. The existing home sales came in lower than expected. Come on, what do they know? This was after the fact, right? And it was a yellow and orange flag report, actually, usually not moving the market. So it was kind of like a little bit of head scratching. And I said, most probably the reason why markets were selling off on Friday is we didn't want to have a surprise going over the weekend because, the White House and President Trump have been really, really active over the weekend for the past few weeks. And we woke up to a Monday morning, and Monday morning was like, oh my gosh, what's happening? And this traders seem to think, you know what, let's move this Monday morning shock to Friday. And that's where we saw the sell off on Friday.
Yeah, yeah. I mean, gosh, and it was a decent sell off. The Dow finished the week down 2.5%, and it was the worst week since October. The S&P was down 1.7%, the worst week since January. And then the NASDAQ was also lower with its worst week since November.
Yeah. So definitely down. But you see, it was really, really interesting that on Friday, it was kind of a broad based sell off. Because look at interest rate,
Sure.
the yields here, right? Bonds also sold off, as we can see here on Friday. So Friday lower, today also lower. And usually we have the inverse relationship there. And then we also see that cryptocurrencies are lower. So, right now, it's kind of like, okay, let's get out of this and put some money under the mattress, which is super weird because we have this kind of still high interest rates environment. And it also seems that the Fed is not in a hurry to cut rates anytime soon. Although right now traders are factoring in that there might be the first cut coming in June.
I think that's a little overly optimistic. What do you think, Marcus?
I think so too. I think so too. But then on the other hand, we see some news, for example, um, that Starbucks lays off, oops, I clicked on something else, on 1,100 corporate workers as sales tax. So, this is one of the things that the Fed always said we're keeping an eye on the employment market, on the jobs market, and we already know that because of Elon Musk and everything that he does there in Doge, a lot of government workers are being laid off, and now we also hear it from some corporations. So I don't know. Maybe at some point we see that okay, the jobs market is getting hit, and that would actually force the Fed to do something.
Yeah, yeah. I mean, I still think it's a little overly optimistic. However, this Friday could give us some more data to really understand what the Fed could be thinking, at least for the next meeting, with core PCE popping up. And this is where investors want to know this little spike in inflation data when we looked at CPI and PPI data. Was it just a blip, or is this a trend for 2025?
Yeah, and the core PCE price index, that is the Fed's favorite inflation gauge. So when the Fed says we want to see inflation below 2%, they are talking about this price index here. That's what they want to see below 2%. Not CPI, not PPI. That's what they want to see. So therefore, yes, super important there to see what's happening. And then the week after, we have employment. So, I mean, next 2 weeks on the economic calendar, definitely a few things that could move the markets. But right now, we also still have some earnings going on.
Yeah, and this morning we had Domino's Pizza reporting before the bell, but the real biggies to keep an eye on this week: Home Depot on Tuesday, Lowe's on Wednesday, and Nvidia, which is the biggie of the group, after the bell on Wednesday.
Yeah. And Home Depot and Lowe's are giving us an indication how the economy is doing because they're telling us what consumers do with larger projects. And I mean, recently we have heard from them that consumers are still holding off on larger projects because they need to be financed. And this is where, okay, has this changed? Are consumers right now spending money? Are consumers financing? Or are they still holding off because interest rates are still fairly high?
And we'll hear more this week.
Yeah. And maybe it's also just that everybody over the weekend heard that Warren Buffett is putting a lot of money or having a lot of money in cash. I mean, over the weekend, Berkshire Hathaway reported earnings. So, and Warren Buffett published his annual letter to the shareholders. And interesting to see, $334 billion in cash.
That is a lot, and it's all relative. And there's a few ways I think you could take this. Some people think, oh my gosh, Warren Buffett's bearish, and he thinks that the market's going to drop, so he wants to be there. Another angle could be taking profits to buy something great, and then the other part to it is with yields higher, you're taking some risk in equities, and you might want to wait for that really nice opportunity. He did say that, hey, the truth of the matter is a great majority of money is in equities, which will always be the case.
Yeah, and this where he actually it's exactly here. Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities. He said, "I'm not in the business of holding cash. I don't like cash.
Yeah.
I wish that I wouldn't be in cash, and I don't see anything that looks interesting to me that I want to buy at the prices where they're at." So again, does this mean that he is bearish? No, he just says, I have been selling at all time highs. I've been liquidating a lot of the positions and I'm waiting for an opportunity to buy some more. Now, he's also very patient. So he's not waiting for
Yeah.
next week, next month. He's okay waiting a few years. By the way, he's now what, 94 years old? That's amazing.
Yeah.
That's so cool.
He's had quite a life.
Anyhow, all right. So let's see what else going on. Well, let's actually hop over to our positions. What do you think, Mark?
Sure.
Yeah, let's do this. So, first of all, we had quite a few WTF trades this year, and they have been working out really, really great so far. We have been able to close a few more last week for a profit, and therefore, right now, we didn't have any WTF trades. And this morning, we saw three WTF trades popping up. And the first was Walmart. What do you think about this, Walmart? Should we take it? I mean, Walmart, after all, reported, I don't know, concerns about going into 2025, lower guidance. So should we have bought it, Mark? Especially right now. I mean, we got in at 94.16 and it moved lower. Was that a mistake?
For me, this is a picture perfect WTF opportunity, winning the fear on that pullback. Now, of course, there's been a little more downside this morning, but for me, it was a great signal according to plan. So I bought shares of Walmart.
Yeah. Same here. Same here. And then Amazon. Amazon also another signal this morning. And at first, it looked like Amazon would bounce back from the sell off last week. Right now, trading a little bit lower. So we got in around 217.45. Right now, trading at 213.58. And I mean, yeah, could have waited, should have waited, question mark. I mean, we follow our plan, and our plan is as soon as we get a WTF signal, we are buying it into the open. And that's what we did this morning. And when I said, so far this year, it has been working out great.
Yeah.
Finally, Mark, Broadcom, AVGO, another one that appeared on the scanner.
Yeah, and this was another one that I picked up at the open with markets trying to find some direction. There's an opportunity to get in at a lower price now, but according to plan for me, and we'll look for a nice exit.
Yeah. So same here, entered around 218 right now, trading at 213. And we'll see. I mean, the last trade was just picture perfect. Even the trade before. I mean, these were just great trades. And well, we'll see what happens here. I mean, so far, slightly down because overall the markets are down right now. And we'll see what happens. All right. Hopping over to our wheel trades. And on our wheel trades, did you already talk about BP last week?
Yeah, I'm pretty sure I mentioned that I have let that one go. So no longer MVP was able to close it for profit by actually getting called away and getting some real nice premium on those calls going into earnings and freeing up a position for me.
Yeah, absolutely. So this worked out well. Another great trade with the wheel. Was down at some point, and yes, of course, this is where you might say, "Oh my gosh, I was stuck in a trade," but we followed our plan, and by following our plan, we got out of the trade as expected. CSIQ, one of our other trades that we're in, and CSIQ looked pretty good over the last few days. I mean, last week, CSIQ rallied around 20%, so this looked good.
Yeah,
Today, a little bit of a pullback down 3%, but right now it seems that CSIQ decided, yeah, you know what? I no longer want to hang out here. I'm going back to finding 11 as a solid support level. So let's see, and then let's bounce off and move higher here.
yeah, and I think that's the level to watch. 11. See if we could hold up there, stay put, and see that move higher continue.
Yeah. HAL Halliburton. I mean, Halliburton, I was very interested, and I had actually a put that I sold at 25 to fly a rescue mission here on Halliburton. Halliburton has moved up nicely last week, so right now I'm still waiting to sell more puts at the 25 level to bring down my cost basis even further. As you can see, not my cost basis, my cost base at 34.50, but my break even at 31.61. I want to bring this down a little bit so that with the next bounce, I'm moving above my break even here. Right now for today, Halliburton actually up against the overall market. The overall markets are down. Halliburton up 0.9%. I'm liking this.
Yeah, that works.
So that works out. IWM. We did take an IWM trade this morning because we like it here right at support. We moved here a little bit more aggressively, Mark. We sold the 217 put. I mean, right now you can sell the 216 put because IWM moved a little bit lower. But yeah, I'm happy with this trade at 217, seeing some solid support here.
Yeah, I took this one as well, and expiration this Friday, some nice premium and support.
Yeah, and I mean, we have been waiting on this trade to get in for quite a while when it was trading higher. We said, oh, all we need is a little bit of a pullback, and then we can get into it. And on Friday, we sure had it. And today, with a little bit follow through, we were finally able to sell puts on IWM. Good. Coles, trade that I'm in, and Coles. I mean, right now it seems that Coles today up 2.3% against the overall market. So I want to see what happens here as we see Cole is also trying to figure out, okay, what is the support level where I want to hang out at? Is it at 1150 or is it at 1250? And I'm waiting until Coles has decided whether it is 1150 or 1250. And then I'm planning to sell some more puts to actually fly a rescue mission and bring down my cost basis some more. Cost basis right now at 1880. At 1708 is my break even. And we'll see. I mean, I do believe that at some point we'll have a little bit of pullback, and I just want to be able to identify solid support here.
Sounds like a good plan there.
All right. Merck, another one that I'm in, you're not. And Merck, oh my gosh. I mean, this is where I actually sold the 85 put. I sold the 85 put as part of a rescue mission here. Also, to bring down my cost basis. My cost basis right now at 120. My break even, I've already been able to work down to 113. And Merck right now seems to have, after this earnings drop, kind of a V-shaped recovery here. I mean, today up 2.3% against the grain, right now trading at 91.50. So the 85 puts expired. This is how I've been able to lower my break even a little bit more. I'm still interested in flying a rescue mission here on Merck, but not yet at this level. So I want to see if Merck retraces or if it really just continues higher, moving straight into this level here between 100 and 98. And we'll see what happens here. But I'm not complaining. I mean, this for Merck has been a really good move. I mean, 13% within a week.
Yeah, a real nice reversal there, and let's see if it could make its way higher and fill that gap.
Yeah. And then UPS. I mean, UPS also today going against the grain, up 1.3%. And at UPS, I sold the 115 put as part of the rescue mission here, and I collected some premium. I rolled it, and then I sold the 116, so I moved it a little bit higher here because I still want to get a sign. But I mean, I'm in a really good position here. As you can see, my break even is right here at 122.26. I mean, we are still $5 away. But if we look at what UPS has done here, after the earnings shock, after they announced that they will cut their business with Amazon, I think it was in half or something like this, we had a really nice 8.5% run. And I mean, for UPS, that's big. That's a lot.
Oh yeah, it's a real nice move, and just like Merck, looking for this one to fill that gap, and that would be nice here. I picked up some shares. I didn't sell puts. I picked up some shares on the initial drop, and got those at 113.50. And then last week I put on a fancy trade here that goes in a little more detail than would be appropriate for this video. But I've essentially brought down my cost basis to 130. Oh gosh, I had it. Now I'm missing it.
130 something. It is a mystery.
130 something. Yeah.
130 to something. We'll
So
have it for you, but I mean, yeah, this is also putting you in a much better position here. Um, I mean, my cost basis is still at 144, and I'm still planning to fly a rescue mission and getting assigned. But I mean, I'm very happy with my break even here. And if your cost basis is at 130, your break even is also probably similar, that somewhere in the 120s.
Yeah, I think my cost base, I think my break even is close to 128, and then my cost basis is like 138 or something like that. I'd have to double check. I thought I had it here, but I don't. Either way, the point being is uh, looking for UPS to make a move here. Picked up some shares, put on a position that will give me an opportunity to sell calls sooner, and that would be my goal. I think this one could move higher, but it could be very difficult to get back up to 165, which was my original cost basis. Although I've collected some nice dividends on this one, decided to make a move to get out of this one, hopefully in the next 6 months.
Right. And I mean, this this break even right now does not yet include the dividend payment because it hasn't been paid. We just had ex dividend. It will be paid on March 6th, lowering the break even by another $1.64, bringing it closer to around 120. So I'm very happy with how we managed this trade, Mark.
Oh yeah, it's so far it's working out nicely and doing what we hoped after that initial earnings drop.
Yeah. All right. And I see that there's some movement in the market. So we have to get back here to the markets in just a moment. And before we do this, I haven't told a dad joke in for so long. So, and I know that I had a lot of opportunity to come up with a good dad joke. I don't know. You might win, but what do you got?
Never think that I'm gonna have a dad joke that could win, Marcus, because that's part of having a dad joke. So I mentioned that over the like this, so this is not a joke. This is true. Over the weekend, my wife and I we went to Grass Valley, and there's the Empire Mines there, which was really neat. We visited it. They produce 5.8 million ounces of gold. They have 367 miles of deep mine shafts. That's not a joke. That's the truth. But
All right.
in the spirit of gold mining, what type of dessert does a gold miner make?
I don't know.
Carrot cake. Okay, I tried to make a joke about gold, but it didn't pan out.
Okay. All right. Hey, here's another one for you. Have you heard that there's an open position at Old McDonald's farm?
I did not.
They're looking for a CICIO. All right, guys, you need to let
Okay.
us know in the comments who won this morning.
Marcus, 3 weeks, Marcus. 3 weeks.
CICIO. Okay,
You had
anyhow,
3 weeks.
well, I have a lot of inappropriate ones. We can't tell on the show
Yes,
here.
you do.
All right. So here we go. While we have been talking, the markets are pulling a little bit higher. So we are still negative for the day. The Dow, however, managed to pull positive, up 0.2% right now. The S&P just about to break even, still down 0.15. And the NASDAQ right now down 0.75. But we see that the S&P right now just moved above the all-important 6,000 level. And if you're also looking here at a daily chart and we go back to the 50-day moving average, we see that we are getting awfully close to moving above the 50-day moving average again. So both the 50-day moving average and the 6,000, super important support levels here. So we'll see if the S&P is able to pull higher today. What do you think, Mark?
I think this could be a buy the dip opportunity. We're coming off of those lows. So will we go positive? I think we could be positive today.
All right. We shall see. We shall see. Anyhow, hope that you enjoyed today's show. And if you did, do us a favor and give us a like. If you know that there's some others who might benefit from it, please forward it to them. There's a share button somewhere here on the page. And with that said, we're looking forward to talking to you again next week. So make sure that you tune in. Until then, have a great rest of your week.
Happy trading, everybody.